Over the last 2 days, Bitcoin has gone absolutely insane, smashing through 112,000, then obliterating $118,000. But here is what's terrifying. This is just the warm-up act. While retail traders are scrambling to catch up, institutions are quietly positioned for 130,000 by September. But there is something much bigger happening here. Something that connects these crypto explosions to forces most people can't even see. Watch this video closely, because I'm about to expose what's really driving this market madness. The invisible puppet masters pulling Bitcoin strings. And most importantly, the critical signs you probably missed during these 2 wild days that could determine your financial future. I'll reveal shocking data about who actually controls Bitcoin, and trust me, Michael Saylor's grip on the supply will blow your mind. I'll break down why the epic battle between Trump and Powell isn't just politics, it's the catalyst that could send Bitcoin into orbit or crash it back to Earth. And we'll decode the technical signals. Are we heading straight to 130,000? Or are we about to get blindsided by a brutal correction back to 100,000? But the million-dollar question that's keeping everyone awake at night, will this Bitcoin rally be the final nail in Altseason's coffin? Or is it about to unleash the most explosive altcoin run in crypto history? But before we dive in, if you are serious about maximizing your crypto gains, do yourself a favor. Smash the subscribe button and hit the notification bell right now. I'm here to provide you with valuable insights, and all I ask in return is for you to subscribe to this channel. Subscribed? Great! My name is Sava, and let's figure out what madness is happening in the market and why these 2 days might change everything. Let's start with the main thing. $6,000 of growth in 30 hours isn't just a good day for Bitcoin. It's a screaming signal that 90% of traders completely missed. Here is what really went down. Day 1. We cracked 112,000, and most people thought this was just Bitcoin trying to squeeze a little high before a massive correction hit. Just another fake out, nothing serious, but the smart money. They knew this was just the appetizer, because while retail was dismissing it as weak, something massive was brewing behind the curtain. ETF inflows went nuclear. In a single day, $211 million poured into Ethereum, breaking every record in the books. It's not about how much money came in, it's about who was buying and why they were buying now. 3 hidden forces just turned the market into a powder keg. First hidden force, stablecoin printers went absolutely insane. Over $1 billion in fresh Tether, plus another $250 million in USDC, all printed in the span of days. You know what that means? Somewhere in the world, there is $1.5 billion worth of demand for digital dollars sitting on the sidelines. And where do digital dollars go when they are ready to deploy? Straight into Bitcoin and crypto. But here is the kicker. These aren't mom-and-pop investors buying the dip. These are institutional war chests loading up for something massive. Second hidden force. While everyone was glued to Bitcoin charts, the dollar quietly collapsed to a 14-year trend line. And here is economics 101. When the dollar gets weak, every risk asset on the planet gets rocket fuel. Of course, Bitcoin included. But there is more. Bitcoin just flashed a technical signal that historically delivers an average 27% gain over the next 100 days. And we are barely getting started. A brutal truth. Most traders saw the first all-time high at 112,000, just $30 above the previous record, and thought, that's pathetic, nothing serious here. Let's wait for a pullback. But the players who actually understand this game, they were watching liquidity stack up, volatility compress, and the entire system coil like a spring. And when that spring finally snapped, most people were caught completely off guard. Now they're in full panic mode, desperately trying to jump on a train that's already left the station, but that train is just picking up speed. So let's talk about who's actually driving it. And trust me, when you see these numbers, your jaw will hit the floor. Michael Saylor and his company Strategy own 597,000 Bitcoin. That's more than 82% of all Bitcoin held in corporate treasuries worldwide. Let that think in for a moment. One man controls more Bitcoin than the entire global mining industry combined. But that's just scratching the surface. All corporate treasuries combined control only 3.64% of the total supply, 725,000 Bitcoin. Sounds tiny, right? Well, ETFs already hold 6.33% of Bitcoin's total market cap. That's $139.4 billion. Do you see the game that's being played here? Every single day, Bitcoin is becoming a playground for the ultra-elite. Retail investors think they are trading in a free market, but the reality is brutal. The price is controlled by maybe a dozen major players, and these major players have zero intention of selling. Saylor has publicly stated he'll keep buying Bitcoin until his dying breath. ETFs operate like industrial vacuum cleaners. They hover up Bitcoin from the market and lock it away forever. And what does this mean for the price? Bitcoin supply is getting squeezed like a vise. Every day that passes, there are fewer and fewer Bitcoin available for regular people to buy or sell. Meanwhile, demand is exploding. Just in the past few days, we have witnessed record-breaking inflows into ETFs. This isn't just random market activity. This is panic buying from institutions who just realized they are dangerously late to the party. When supply gets strangled and demand goes parabolic, there is only one direction for price to go. And the big players, they know this game better than anyone. But here is what's really wild. Their market influence is nothing compared to what one single decision from Washington could do. It could either launch Bitcoin into the stratosphere or completely destroy this rally overnight. Trump has just declared all-out war on Jerome Powell, the head of the Federal Reserve. And this isn't some Twitter drama. This is a full-scale battle for control of the American economy. And Bitcoin is caught right in the crossfire. Here is what's going down. Trump is demanding Powell step down immediately. His reasoning? The current 4% interest rate is economic suicide. According to Trump, rates should be sitting around 1%, not shocking the economy at current levels. Think this is just the political theater? Think again. Trump is claiming that these high rates are bleeding America dry, $400 billion per year going straight to debt servicing instead of productive investment. That's money that could be building the economy, but instead it's vanishing into the black hole of interest payments. Trump isn't just complaining, he is already shopping for Powell's replacement, someone who will be much more willing to slash rates and fire up the money printers. What happens to Bitcoin when the Fed goes into full money printing mode? It doesn't just go up, it launches into orbit. But here is the crazy part. The market might already be front-running this entire scenario. That could explain why we are seeing Bitcoin absolutely demolish resistance levels right now. Smart money isn't waiting for the official announcement. They are positioning themselves before the Fed pivot becomes reality. When could this bomb drop? This week? Next month? Nobody has the exact timeline. But the pressure on Powell is absolutely crushing. Even Senator Cynthia Lummis has jumped off the Powell must go bandwagon. And if Powell actually gets the boot and replaced with someone who loves printing money, buckle up. Because we might not just hit $130,000, we could be locked into a rocket ship towards $200,000 and beyond. What we will see first? $130,000 or a brutal correction back to $100,000? Let's cut through the noise and look at the hard facts. Check out these insane numbers. In 30 hours flat, we rocketed from 112,000 to 118,000. And trading volume is absolutely exploding. That means genuine interest, not just degenerate speculation. Right now, Bitcoin is sitting in the danger zone where every single move matters. If you can hold above 118,000 and push higher, the highway to 130,000 is wide open. But there is basically zero resistance at those levels. We are flying blind to the completely uncharted territory. But let's be real, there is another scenario that could wreck everyone's dreams. Bitcoin might be exhausted from the parabolic rise and crash into correction mode. The key levels to watch is 108,000 and 105,000. If those levels get obliterated, then yeah, we might see 100,000 before 130,000. What's trader psychology telling us right now? Options activity has gone completely nuclear. Everyone and their grandmother is trying to catch this rocket ship. When everyone starts peeling in, it usually means there is still fuel left in the tank. Plus, we can't ignore the institutional vacuum cleaner effect. ETFs are inhaling Bitcoin off the market every single day. This creates an artificial supply crunch that could launch prices even higher, regardless of whether Bitcoin looks technically overbought. My honest assessment? The odds of hitting 130,000 are way higher than crashing to 100,000. But crypto markets are absolutely ruthless, so you need to prepare for either scenario. Now let's tackle the question that's threatening every altcoin holder on the planet. When the hell is altcoins finally coming? This is the most brutal question in crypto right now. Is this Bitcoin rally about to bury Altseason 6 feet under? Or is it the green light we've all been desperately waiting for? Let's start with the soul crushing reality. Bitcoin dominance is climbing, which means capital is hemorrhaging out of altcoins and flooding into Bitcoin. While Bitcoin is going parabolic, most alts are either flattening or getting absolutely destroyed. But here is a critical piece of the puzzle most people miss. Throughout crypto history, alt seasons have typically ignited right after Bitcoin hits new peaks and starts consolidating. The psychologically is simple. Smart money takes profit from Bitcoin and starts hunting for the next explosive opportunity. I have explained how alt season historically starts in this video, so don't forget to watch it. But these days, things get absolutely wild. If Bitcoin actually reaches 130,000 and plateaus there, altcoins could witness the most explosive rally in crypto history. Especially considering that most alts are currently trading at rock bottom levels against Bitcoin. But there is another catalyst that could detonate the entire altcoin market: the Ethereum ETF with staking rewards. The Ethereum Community Fund has just announced their audacious target, pushing ETH to $10,000. That's a 4x explosion from current levels. And if Ethereum goes parabolic, it will drag the entire altcoin ecosystem up with it. We might be on the verge of an alt season unlike anything we've ever witnessed in crypto history, because we've never had these levels of institutional firepower, this much liquidity flooding the system, or this kind of mainstream adoption happening simultaneously. Just picture this scenario. Bitcoin stabilizes at 130,000, Ethereum rockets toward 10,000. What do you think happens to the rest of the altcoins universe? They could explode by tens or even hundreds of percent. We are talking about wealth-changing moves for anyone positioned correctly. But here is the harsh reality we need to face. There is a very real possibility that institutional money stays laser-focused on Bitcoin and Ethereum only. If it happens, small-cap altcoins could get completely abandoned. Instead of an alt season, we would see a brutal market split between institutional-grade assets and everything else getting left in the dust. So which scenario will actually play out? That depends on how far the cycle can push, and exactly how much fresh capital flows into crypto over the next few months. But what I know for certain, the next few months will determine the fate of every altcoin holder on the planet. This was SavvyQ. If this analysis helped you see the bigger picture, smash the subscribe button and hit the like. I'll see you on the next one.